Hey YouTube, what's going on? It's your boy TriniFX back with another video. And today guys, I just want to really go over my model, the way I look at the market step by step. And in my opinion guys, it's really the only model that you'll ever need. Um, when you look into all the quote unquote strategies out there, I don't really subscribe to a strategy per se. You do have frameworks that you can work within. But if you study the ICT concepts, many people say, it's a lot of content to take in, a lot of concepts, and yes, but every concept builds on another. And when you put it all together, that's when you have a full understanding of the market, right? This is not a one trick pony. You can't just learn one concept and think you know how the market runs, because the market is very complex guys. There's a certain time it we will be trading in a particular way, and then that will change, and so it's a lot of things you have to consider. So that's why I don't like to really say strategy, but you can have a model, a methodology of how you look at price, and that's what I'm hoping to showcase here. Video is not going to be very long, and please understand that you cannot learn how to trade by watching a 5 minute or a 10-minute video, guys. Trading takes time, it takes a lot of experiences, and just understand that. Yeah? So let's get into it. So, the way I look at the market, guys, I always start on a higher time frame if you have watched my past videos. So, right now, we're on a 1 hour chart, and we're going to take this day into play here. All right, so if we look the day before, we could see price ran up, ran down, and closed. So what I look for, I mark off all the fair value gaps that are close to price, either above and below. I did mark off this bearish SIBI here, because we could see Asia opened and traded higher. So we're starting this day. What I look for: Asia opened, traded higher, and traded lower, back into this BC here. So the model that I look for is really the power of three, or accumulation, manipulation, and distribution. That's how I frame my day. I try to get in. So market open here, sorry, midnight open, that's when the algorithm begins to run. So we could see it opened and we dropped lower. So I would class this as my manipulation leg. It happened to tap into a 1 hour BC that sent price higher. And we could see once it closed above midnight open and started to trade higher, guys, in my opinion, once price has not taken out a higher time frame level of liquidity, or on a daily or weekly or previous day, expect price to continue running in that direction. So there's a couple of things that could happen. We could see midnight open, manipulate, and then distribute. And that's what happened today, and we're going to get into this. The other scenario that could happen is price could open and just rally. If midnight opens and price just rallies, I still consider that a bullish day, and I'll look for longs until a major level of liquidity is taken out, and then price may reverse. So that's scenario 2. Scenario 3 is what I just explained. Midnight open, we had the manipulation leg, it's trading higher. If 9:30 opened and took out these highs, then I would sit on my hands, because price may want to reverse. So I'll either look for a short-term reversal, or look for price to trade back into a higher time frame, like a hourly or 4 hourly bullish fair value gap, then to continue long. So those are the different scenarios that could take place. In my opinion, the two most common scenarios is this one, midnight open, so we manipulate lower and we began to trade above midnight and we continue, so I'll look for longs. And secondly, midnight open and just continued higher, I would look for longs, and vice versa for shorts. Those are the two scenarios in my opinion that occur regularly. The reversal model, it happens, but I have seen this play out multiple times. So in this scenario, we opened, we traded lower in the manipulation leg into a 1 hour fair value gap, and we could see price trade and close back above midnight, never to return. Price keeps trading higher, higher, and we had all these levels of liquidity, guys. So you must understand or must have an idea of where price is likely to go, right? Yes, one could say, well, we were bearish here, we came down. If price was to continue lower, it would have traded higher and it would have continued lower. But we could see it started to trade higher, leaving behind higher time frame 1 hour fair value gaps, guys. Right? So those are major levels of inefficiencies. So we're going to drop to a 15-minute, my bellwether chart, and we'll take a look at this day in more detail. Just keep in mind we had all these levels of liquidity to run. So in my opinion, this run was considered a low resistance liquidity run. We had this high. This high never took out this high. This high never took out this high. So everybody who was short, price ran and take them out. So this is the model I look for. Accumulation, manipulation lower, and we rally. So we're going to drop to a 15-minute time frame and take a closer look. So on the 15-minute chart, we could see what I was looking. This was yesterday. Price traded lower. Asia opened, we began to trade higher. This is a 1 hour fair value gap, a 15-minute bullish fair value gap. So when market opened, traded down into it and began to rally higher, we could see it building on 15-minute fair value gaps, leaving behind bullish fair value gaps, and began to trade higher. So we have 15-minute fair value gaps, bullish fair value gaps. We had hourly bullish fair value gaps. So that gave me confidence that, all right, we may be targeting this high at a minimum and then target the rest of liquidity for the previous days. So I mark off my New York open. So the market opened, and what I look for, if price wanted to continue higher, I would always want to see the very same thing I look at on an hourly chart. Open, midnight open, trade lower, then trade higher. That's exactly what I want to look for on a 15-minute time frame. Open, trade lower, then trade higher, guys. Price is fractal, and what goes on an hourly chart happens on a 15-minute chart, a 5-minute chart, and ultimately a 1-minute chart, which we'll get to. And that's what I look for, guys. Once everything is in sync, you have a very good trading model. So price opened up, and where did it trade into? A 15-minute BC. That's what we look for, guys. All right. So it traded lower and then began to trade higher. So I don't spend too much time on the 15-minute time frame after I mark off all my levels. I just look to see, okay, open, did price trade into a 15-minute or even a 5-minute bullish fair value gap? Yes, it did, and it began to trade away. So once I'm seeing price leaving this fair value gap behind, that's the only time you drop to a 1-minute chart, guys. Not before. When it starts to trade away. So we could see, and we could be eyeing this buy side liquidity here. And if we measure that move, that would at least give us 226 points, guys. And we could see price did run higher. You don't need to catch this entire move. You don't need to, guys. If you have the ability to take partials, you can take partials at 100 points, you take partials along the way, because on a 1 minute chart, there are highs on the left side of the chart. On the 15-minute time frame, it may just look like a complete wash, flush lower. But all these highs are highs on a lower time frame as well, and in between here there are highs. So we're gonna drop to a 1 minute time frame now, and let me show you how I frame the entry, which is the last thing that we want to look for. Your entry is the last thing. Alright, so I hope we understand. We move from an hourly, mark off all our higher time frame hourly fair value gaps. Same thing is going on a 15-minute chart. We open, trade lower, into busy, and then we begin to trade higher. So we never came back to midnight open, and price opened up, we traded lower and began to rally. So let's drop to a 1 minute time frame, and let's see if we could frame an entry. So what we could see on the 1 minute time frame, guys, now you can use any time frame you wish. Let me just change this here. It doesn't matter if it's a 30-second, a 1 minute chart, or 2 or 3, guys. Whichever time frame that is clearer for you, that's the time frame you can use, because as I said, price is fractal. What happens on a 1 minute happens on a 2, a 3, a 15. Actually, the higher the time frame under a 15-minute or a 5-minute, it is better, because price is on a higher time frame. The lower time frames, can tend to go a little back and forth before it actually moves, right? So whichever you're more comfortable with. I know some persons don't like trading on a 1 minute time frame. That's fine. Then move up to a 2 or even a 3-minute chart. So we could see on the 1 minute time frame, price market opened up, rallied down. Remember, this is a 15-minute fair value gap. It is also a 1 minute fair value gap as well. So price was trading higher. We have the hourly trading higher, rallied up, formed the BC, market opened and rallied down. So once price began to rally and close above this candle, I class this as my market structure shift, guys. And for me, I enter 2 ways, guys. All right, this entry was a confirmation entry. We opened up, we wicked down, and we closed above. That's where I took my entry, guys. So for me, this is a confirmation entry. Take my entry there, put my stop below the fair value gap, and let's just target the buy side liquidity there. Of course, you take partials along the way, right? The second way I enter, which, let's be honest, to me, in my opinion, is the safest way. Once price traded down, give you the market structure shift, you wait for price to rally away and trade back down into a fair value gap that was created. If you waited in this scenario, price would have gone without you, and then you say, okay, you call it a day, right? Or you look for a retracement into a higher time frame fair value gap. But this day price was very bullish, that once it traded down, I had the confluence and the added confidence saying that it was trading into a 15-minute and a 1 minute, that I took my confirmation entry there. So it was a continuation entry basically, and price rallied. So we could see how I started off on a hourly chart. I looked for my midnight open, accumulation, then we dip lower, manipulation, and this leg is the distribution, but on a 1 minute chart. And then I drop to my 15-minute, mark off my 15-minute fair value gaps, wait for market to open. New York opened, we rallied down into the 15-minute, and as price was trading away, I dropped to my 1 minute chart, and lo and behold, It did trade down into a 1 minute BC as well, closed above this candle, and you could have taken your entry. If we go to the left, gotta make the charts a little smaller, guys. I hope you can still see it. This was the buy side liquidity level that we were targeting, and let me just get it on top. Whoops. Right, that's the level we were targeting. What do we see when we look to the left? You must always look to the left, guys, because price will refer back to what happened on the left side. All right, so we rallied up, traded down into the 1 minute and 15 minute, and closed above. What did we close above? All these things you have to be paying attention to, guys. This right here, I'm not gonna drag it totally across, but at least you could see it. Now let me drag it across. Change the color. What did it do there? That's an inversion. Fair value gap, guys. Right? If price was to be remain bearish, it would have traded lower. Like this traded higher and ran lower, and then we broke it again. So you refer back to the left side of the chart. Once price closed above the inversion, look at these other two candles, guys. They traded down, but could not close within the inversion. So once I entered and I continued to monitor price, I can see, all right, we inverse this SIBI. It should have acted as resistance. However, it did here. Send price lower, started to trade higher. Price opened, sent it lower again, but then price rallied and closed above it, inversing it, making this an inversion fair value gap, guys. All right, all these things you must look for. So I entered, targeting the buy side. Once price began to trade above these SIBIs, you could have trailed your stop under the SIBI, took partials, and ultimately run the buy side liquidity. So watch this video again from the beginning. Go back to your own charts and take a look and see exactly, how many times what I'm saying transpired. It repeats every week, guys, every week. You can easily get 3 good setups every single week. I mean, I get it every day, but you can get good setups 3 times a week. You just have to remain patient. Do not FOMO. Don't take every move. If you just zoom in to a 1 minute time frame, you're gonna get chopped up because everything will look like a shifted market structure. It will look good, but what is the higher time frame telling you? Where is price gravitating to on a higher time frame? So step 1, you have your daily narrative, and that's what I look for, power of 3. Then I mark off my higher time frame fair value gaps above and below price that price may draw to. Then I look for, all right, where is the likely draw on liquidity? Do we have relative equal highs? Do we have low resistance liquidity by having stacked highs? Yes, we do. We mark off those levels, and then we drop to our 15-minute time frame. Do the same thing and wait for New York to open. Once New York opens, you will want to see certain things. If you don't see what you anticipated to happen, sit on your hands for a while, let the markets do its thing, let the first 15 minutes, half an hour play out, and let the market make up its mind, and then you can look for a continuation entry for a reversal. After that happens on a 15-minute time frame, then and only then you drop to your lower time frame and you look for price to trade back into a 1 minute fair value gap aligned with your direction. Look for your market structure shift with displacement and price to rally back down into the fair value gap, and you take your entry, or you look for a continuation confirmation entry like I did here, guys. So I hope you found this video insightful. I'm gonna do a lot more content like this so that you guys can understand what I look for. Go back into your charts, back test it. Don't look for a strategy. Try to understand the way the market moves and fall in line with it. The market only does two things, guys. It rebalances inefficiencies or targets liquidity, either buy side liquidity or sell side liquidity. Once you understand that and you ask yourself where is price likely to gravitate to next, you just have to fall in line. So, hope you found some insights. Give me a like, subscribe if you haven't, guys, share this video, and I will talk to you in the next one. Stay safe, guys. Bye bye.